Hello and welcome to Enfoque channel. I am Fausto Botelho, broadcasting from Brazil, and here we use our experience in technical analysis and try to extract logical indications about the future behavior of the crypto prices. Nowadays, we can't run away from having to speak, to talk, to analyze the stock market of the US and the rest of the world. Because as we've said in the last video, I think we're facing I think we're in the eve of a big crash in the US. In the last days, the market had a rally, but I'm going to be updating you today and showing you why I think this is just nothing, just a simple reaction, or maybe the dead cat bounce, as some used to say. So let's take a look first in the S&P. Here we go for the S&P. That's a 68-year-old chart of the S&P starting in 1950. That's the dot-com bear market, and this is the subprime. Market is going up since 2009, so it's been 9 years of upward trend. So what are the signs that we've had so far? What are the indications? And that's something very important, my friends. I think it maybe is one of the most important things in technical analysis, for you to rank the indications that you have. So we're having this rally now, right? But what are the indications that we should consider that are more important than whatever we're having now? Well, first, we've had a bull trap on a second top at the same level. Market topped in the beginning of the year, and then recently it went up again and broke the all-time high, the mother of all resistances, and came down again. It's been 20 years that I think that's the most important indication that technical analysis can give us. So we've had this bull trap in a major resistance level, and then the market broke a very important support line, which is the support line that came all over these below this bull market that started in March 2009. Right? So these are the very important indications that technical analysis is giving us. Another thing, let's come back to the chart here, but another thing is that when we see the trend from far away, like we're doing now, when we're able to see the forest, not just the trees, we can easily see that the market made 3 upward movements, right? And so in terms of the Dow theory, S1, 2, 3, 4, 5, we're probably ending wave 5. So that gives us the right, as technical analysts, to draw these Fibonacci lines and to think and to forecast that the market might come down to the first Fibonacci correction level, which would mean for this market for him to come another 35% down. When could that happen? Well, actually, nobody knows, but you can easily think of something like what, that. I think if you do that, if you put a 90 degree angle here, you would be doing the same thing that it did in the upward trend, right? But we know that the market goes up using the stairs and comes down using the elevator. That's a saying of the markets. So it will probably be doing something like that. And that's not very unusual, because it's much less than it did in the subprime, and it's also much less than it did here in 2000, in the end of the bear market in 2000. So if we just borrow that oscillation that it did in 2000 and extend it a little bit here, well, the market could reach this 30% downward oscillation at the beginning of March next year, right? And so that's it. Another important thing that we have to consider too is when we see the force from even further away, which is what we can do with the Dow Jones. And that's the Dow Jones, of course, in log scale, and it's deflated by the CPI. I've shown here some other times, but it's never too much to show it again. In this period, we had 2,510% of inflation. That's from 1913 to nowadays, right? If you see the Dow, let me put it in candle and put a weekly chart here. If you see the Dow without taking the inflation out, you see something that just goes up, and you see this accumulation here incredibly below 1,000. When you take the inflation out, this accumulation turns into a downtrend comparable to 29. And there's a whole new perspective for the Dow Jones, okay? So just take a look at where a double top is forming. It is in the some people call this line here as a return line. I used to call it as the guideline of the upward channel of the century, upward channel of the Dow, right? So here's where it's happening. A probable double top, right? So that's very meaningful. 1, 2, 3, 4, 5. So I think we're probably coming down. But there's some of my colleagues are thinking the market should go up, and there's no reason to believe that we're starting a bear market here. Let me show you what's happening here. Apparently, the reaction of the downward trend has gone to an end. Market has had a bear candle today, right? But what I wanted to show, coming back to the S&P, is I wanted to tell you that you shouldn't be concerned about this upward movement. That was wild, I know, but this was an oscillation of, in 1, 2, 3, 4 days, that was an oscillation of, wow, 5.8%, right? From low to top, 5.96%. Okay, let me show you an oscillation that we had just before the subprime, the real crash of the subprime started, which was this one here, right? So take a look what happened at that time. We're in September 18, 2008. From low to top in 2 days, the market went 11% up. And then, my friends, it came down 32%. And that happened in 21 days, right? So, I mean, it doesn't show anything whenever the market is coming down. and it was coming down already for a while in 2008, right? What I showed you was over here. The market had come down already for a while. Now, if it took this while, so months, right, almost a year to start the crash, why would the market now start the crash right away? Because, well, everybody knows that this is inflated. Everybody knows the situation of the US owing $21 trillion, right? And I think there's only one downward trend that can be compared to what could happen nowadays, which is what happened in 29. See, in 29, the market had this huge sell-off. We're in, oh yeah, again, see, 10% up in 1, 2, 3, 4, 5 days. In 5 days, the market from bottom to top, it went 11.9% up. From close to close, the market went 8.5% up in 1, 2, 3, 4, 5 days. And then it fell. Let us just come here. 39% in 18 days. Right, so and that was, you know, quite near the top, and so we have to consider that the top was already made in January, in the beginning of the year. So we're dealing with this bear market for a while, almost a year already. So yes, the market could start this crash right now, Monday. It could start on Monday or Tuesday or in a week or two, or I don't know. But what I know and what I want to advise you is that this is no time for you to sit in a situation of buy and hold, in a buy and hold situation. No, don't do it. We're up and away, you know. Protect yourself. Place a stop. You have to place a stop. You should place a stop. Because if the market starts falling, you're never going to sell your stocks again, my friend, as most of the people do. They don't sell their stock because they keep hoping for the market to come back, and they don't sell it. So unless you have something that will automatically take you out of the market, which means a stop order placed in your broker, you're not going to get out. Okay, so think about that. It's not time for you to keep being a buy and holder, following the buy and hold strategy. Now it's with a stop strategy. Okay, so now let's think about the situation of the cryptos. I have posted in the last video that I think cryptos are going to be benefited, but that's not in the very short term, because in the short term, if it happens what I think it's going to happen, if a crash comes, you know, people sell everything. They don't sell their parrot, their dog, and their family, but the rest they sell, you know. And Bitcoin, I think it's not going to escape from that. Bitcoin and all the crypto space are not going to escape from that. So I think you should protect yourself if you have assets in crypto space too. Yeah, do use stops. Place your stops below 6,000 in Bitcoin, or maybe even tighten there in the 6,000, or a little lower, a little upward, a little higher, but place your stop, you know, and just relax, because the market is always there, you know. The important thing, I mean, you can have a lot of punches. You can absorb a lot of punches if you're in a box fight, but you can't absorb a right cross or upper left-handed, or I don't know how you call that, but you know, because you can't be knocked down. That's the point. And now we're in very, very, very in a very, very, very dangerous era. So protect yourself. And one thing for you to do with your bitcoins would be to get out of Bitcoin and enter into dollar. I don't know. Well, I have to, before entering into Bitcoin, I have to show you some evidence that the crash is coming. I've showed you last time, but let's take another look at that, which are some stock indexes. Here we go. Stock index indicators. Here we go. The Dow Jones Transportation. Look, that's the average at that time that Dow use it to confirm indications that he had in the industrial average, or vice versa. So what happened? So far we also had a bull trap here, right? And the market broke its support line, the support line that comes from 2009. And this is probably going to be a double top. Okay, it broke support, it went back again, but it's probably just a pullback to the former support line, which is now, as we've seen today, showing resistance, right? About the utility average that was going up, it's not anymore. I think it has reversed this rally, and we're probably going to be seeing it testing its support line here. If it breaks that support line, well, then maybe the market is already crashing, right? The VIX, which is volatility index, has gone up. It's, I think, accumulating, and I think if the crash comes, it will definitely be broken these resistance here and go much higher. But this is the most important chart that is confirming what I'm telling you guys. That's the 10-year T-bill. Well, this is a long chart from 1970. That's the downward trend that started in 1981. The interest rates came down, and here we can see a reversal head and shoulders with this neckline around here. But this is a very, very, very important support resistance level, because you see that's a huge bottom in 2003, and then we have a bottom here in 2009, and then we have an accumulation here, bottom of the top of the accumulation 2011, and then we have another top here. These are all technical in the same level, okay, as we used to say, we technical analysts. Then we had these stops here in 2013, and the stop these here, and look what happened, my friends. The market broke this resistance line, came down, and look what happened. What happened today? Jesus, this is so frightening. You know, this is so frightening because it just shows that the interest rate is skyrocketing up. So my projection is from 7 to 8%. The point is that each 1% here in the scale is going to be meaning 200 and what? How much is that again? 210 billion dollars that the U.S. will have to pay only for the service of its debt. So if it comes here, 210 billion dollars. If it comes No. That's it comes here. That's $210 billion. Another $210 billion. That's $420 billion. That's $630 billion, and that's going to be 700 and what? I don't even want to think about that, you know. So shit happens, and I think shit is happening. So that's it. Well, let's just take a quick look in the FTSE. The FTSE has broken this resistance line here, resistance level, sorry, and it's testing now it back. It resembles a double top, I think, and we also had a bull trap here last May. Same with the DAX. The DAX so far has broken its support line, so Germany is not very good. It produced a head and shoulders here that projects much lower, right? I draw Fibonacci, and if you think the market is just going to be correcting the first retracement of Fibonacci, we're talking about 30% drop. Okay, so this is it. The Nikkei, the Asian markets have gone up today, but they have broken their support lines. So the world is coming down, the US is coming down, China is coming down, everything is coming down. And another thing, the oil is coming down, my friends. Think about that. Oil is coming down. It's in a bear market. It's in a bear trend. It also gave us a bull trap last month, and it produced a double top, and it's falling. Why is it falling? Why is oil breaking support? Well, that's very easy. I mean, do you think oil would break support, a very important support line, if the economy was to be increasing, it was to be getting better? No, it has broken support because oil, as a leading indicator that it is showing the world that there's going to be a contraction in the world economy. That's what it's saying, basically. So everything is fitting, you know. So coming back to that advice of mine, put stops in your position. Don't forget to put stops. Put it in the broker. Don't place the stops in your head, because you're not going to act. Your subconscious is not going to let you act. Place it in the broker. Don't trust yourself. You're the last person you should trust, as you know, as I know. Okay, with all due respect, of course. So back to the charts here. Now, yes, I want to show you some cryptos, starting with Bitcoin. And quickly, starting with Bitcoin, which is right here. So yes, I still think we're heading to $100,000. That's because that's a weekly chart of all the history of trading in Bitcoin starting in 2010, where we can easily see wave 1, 2, 3, 4, and now we're in wave 5. So far in wave 5, we've had wave 1, wave 2, wave 3. I think we're in wave 4. This wave 4 can easily come lower. Even if it comes lower, it will be respecting this support line that could be here, right? So, well, I've shown last week already. That's what I think may happen. I don't think Bitcoin is going to escape from a crash in the US. It will suffer with that, and so Bitcoin could, you know, just come down to $5,000 or whatever, even lower, and then go up to because yes, I think the crypto is going to be benefited. As I said last video, you know, there's $23 trillion of market cap only in New York Stock Exchange. If 1% of that comes into the crypto space, in the flight for quality, that's going to happen whenever the market starts to crash, as I think it will. If 1% goes to the crypto, it will double the crypto market cap, which is to $200 billion nowadays. 1% of $23 trillion, which is New York Stock Exchange market cap, it's $230 billion, right? So it will benefit. But as I said, I think it will last some time. If we see the market in the daily chart, I think that resembles a downward flag. So for the moment, I think the support trend line is going to be broken, and we're going to be testing these lower levels here: 6,200, 6,000, 5,800, and eventually we're going to be looking at $5,000 here. But we have to wait for that, right? That's just a possibility. I just want to show you two cryptos that are giving signs of life today. First one is where am I? First one is Bitcoin Cash. Hey, take a look at that. It's testing resistance line right now. So it breaks this resistance line, maybe it will rally up. So we're keeping an eye on that. And also, what was that? It was NEO, wasn't it? Yeah, NEO. NEO is also giving some signs of life here, because it's probably breaking this resistance line. But you know, it's in the middle of a accumulation, so you shouldn't pay too much attention on that. And now the cryptos that we're keeping an eye on, which are, let me organize, no, not in Cascade, organize it, Windows, organize, and alphabetic, vertical. So Bitcoin Cash, as I told you, Bitcoin we're keeping an eye on. BitShares we're taking an eye because we think this is a downward flag, breaking down and coming down. Cardano we're taking a look because we think this might be a inverted head and shoulders. It is maybe showing us something here, but not definitely yet. Decred, taking a look at, taking an eye on it. I think we missed some quotes there. Ethereum, we think this is a downward flag, so we're keeping an eye on that. NEO, as I told you, is giving signs of life. OmiseGO, we're taking a look because we think this is a downward descending triangle. And Verge, we're taking a look because we think this is a symmetrical triangle and it's probably coming down. It's flagging down here. It's probably coming down. I wouldn't keep Verge. 0x, we think market is going to 0.0021, 21.2, and because it broke this resistance line here, we keep an eye. And back to Bitcoin Cash. So far, we've had a call, a short call of Bitcoin Cash, which has been stopped today with a loss. But we're also with a short call of EOS, because EOS broke this support line here. We think we're keeping the position because we think it just made a pullback. It's drifting upwards after a short fall. We think it might come down again, EOS. And also Litecoin, which came up today, but didn't touch our stop so far. We're very pleased when these things happen. See, the stop is at 0.008131, because it's probably below. Above some of the upward, probably up over these little top here. And the market came very close to it and starting to come down again. So this is it, my friends. If you liked what you've seen, if you liked our technical analysis, please help the channel. Subscribe if you're new to the channel. Tell your friends. Post it in your social media. Help the channel. Click the bell to be advised next videos. And I'll see you next time. Thank you very much for watching.